Now that the Canadian dollar has touched parity with the US dollar, it represents a great opportunity for Canadians. Aside from the opportunity to purchase US dollar assets, be they real estate, be they high-yielding fixed income securities, or solid equities at bargain-based prices, we should also remember that our cost of living is being kept depressed by the high value of our currency. Investors occasionally express concern about the concept of investing globally because that represents an element of currency risk that they have to absorb into their portfolios. It's important to remember that asset prices move in cyclical fashion. For example, if you'd invested in the Canadian dollar or in resources over the past 20 years, it's only during the past 4 years that you would have generated a rate of return on those assets. The previous 15 years would have been next to nothing. We believe it's important as a risk management tool to replicate global economic growth in our clients' portfolios. Consequently, it's appropriate to have 30 to 35% of your assets invested in US dollars. Think of your portfolio as a combination of various fluctuating cycles, be they fixed income securities, equities, or even the currency component. And therefore, it's important when any one of those silos achieves a high value to sell off and rebalance it. And now is a great time to rebalance your Canadian dollar holdings by buying some more US dollar assets. So what is the outlook for the Canadian dollar? When you think of the reasons for its meteoric rise, running budget surpluses in Canada for an extended period of time, the high price of resources and the tremendous inflow of funds to buy up Canadian companies, one can understand why the Canadian dollar has outpaced other currencies. However, this can't go on forever. It may go a little higher, but it's surely closer to the top than it is to the bottom. One should also recognize that the US dollar decline is almost complete. It's not something that's just happened recently. It's been in place since 2002. And with this decline in the US dollar, some of the imbalances in the US economy are being corrected. For example, now that the US dollar is lower, it's easier for US exports to go to other parts of the world, and that's correcting part of the current account imbalance. Also, US companies have been adept at investing in other parts of the world where they generate greater margins, and those profits are being repatriated to the United States and reducing the budget deficit. So all in all, these imbalances that cause so much concern about the US economy are gradually self-correcting. So once again, we would say this is a great time. Instead of looking at the concerns about the impact that a high Canadian dollar has on the value of your portfolio, look at it as an opportunity to add some US dollar assets to your portfolio and to your lifestyle.
Thank you.